Hi everybody, it's McDonald speaking. Welcome to ICE Commentary this week. We're going to start here with the dollar index and do our top-down approach and then go and look at some of the major spot currencies to come up with a view as to where the dollar index is likely to be trading this week. So starting with a monthly chart here, we've obviously talked about this level for quite some time, 76. It had come right down and broken through. It actually broke about 300 points down to 73, and it was a really nice run down. Now we've had a really big run back up, 300 points back up, and we're now testing that exact level. Now, basic technical analysis is that old support, like this was an old support level, acts as resistance once broken. And it has already happened on a more micro level. If we go and look at a daily chart shortly, on a daily chart it had broken down and come back and tested it, and then broken down again. Now we're just doing that on a monthly chart basis, and the theory is correct that old support does become resistance, and it's a thing about probabilities. So there's more likelihood here of this acting as resistance than not, and the reason is it's a point of memory on the chart. There's been a lot of buying and selling around this point in the past, and it's an exact point, very precise. There's likely to be a lot of buying and selling at that point in the future, and at this particular point there's therefore likely to be some selling there. So it looks quite strong, and it's very precise. Let's go and have a look at some of the other time frames and see how it looks. On the weekly chart, obviously we can see the same level. We're pulling back into all these old lows, and we're pulling back in. The candles actually look quite bullish, and this is the one thing which is a slight issue for me placing any short trade, is that I need a trigger to actually take a short trade. So I've got reason to believe the market should be going lower from here, but I don't have an entry point based on a monthly or a weekly chart at the moment, because even though we're at resistance, a major resistance, and we're also in a good sell zone based on the moving averages, i.e. we've moved down, we've pulled back into the moving average sell zone, and it's a good point to come down, I'm going to need to wait for some kind of a candlestick entry, something to give me a good entry and a good stop loss into the trade. The level on its own, the 7600 level, is not enough to give me that entry point into the trade. Coming to the daily chart, so we can see here that we actually have, this was that test I was talking about, by the way. We broke down, we came back and we tested 76, and old support became resistance, and then we fell down again. Now we're coming back and we're testing that same level again. So it's very precise. You can even see how we hugged that level before breaking down, and then came back and tested it, and then broke down. So it is a very significant level. I would prefer to be a seller here than a buyer, but like I said, I don't see an entry on the monthly or the weekly, and now looking at the daily, same thing. The candlesticks are very, very bullish, and I need to see those turn bearish before I'll take an entry. So my preferred trade is short. I certainly wouldn't want to be buying at these levels, but I will be waiting and biding my time and what I call stalking an entry, looking for the candlesticks to turn bearish and to give me a reason to go short. Let's just have a quick look at some of the majors and see if this backs up our thinking of US dollar weakness or not. Looking at euro dollar, this is pulling back towards 1.4. It's nowhere near as much of a key level as that level is on the dollar index. However, we're pulling back into the moving averages after having made, in fact, a monthly turnaround on the trend, putting in this higher low, breaking up to higher highs, now pulling back and testing it around about that previous high, plus a big number, plus the moving averages. It certainly looks like a sensible place to be going up, but again, very much like the dollar index, there's no reason to be buying it at this level, only reason to believe this is a sensible level for it to turn around and continue going back up. Having a look at cable, this actually looks like one of the better ones in terms of it's a nicer trend and a more pronounced level here. We've moved up. We've talked about this level before. I've just left the lines marked on my charts, but 1.6 is quite significant. It's a sensible buy zone for me, having now confirmed an uptrend here, come back down, testing around that level. Looking at the candles, a very similar scenario across all of these. I don't see a reason to buy cable right now, but I'd rather be a buyer than a seller, and that's backing up my decision there, my thinking on the dollar index. Lastly, let's just look at dollar Swiss, because this has actually moved down further than the dollar index has. It's sold off quite a lot. We don't see any major level, therefore, because this, the key level here was really this parity figure up around the 10,000 level, and this is broken down significantly below there. It's a long way away from that now, but we are pulling back into that weekly sell zone, much like we are on a lot of things, the zone around the averages, around the 10 and 20. So pulling back into that, we do have a big number there as well. It's actually 9,000 as compared to the 10,000 level, which was the big figure. So we're pulling back into that level. That's certainly a bit of old support becoming resistance, but once again, there's no turnaround based on the candles. Nothing to tell us that it's bearish at this exact point, other than we're pulling back into sensible places within the overall trend, and that there's some kind of support or resistance in the way. So really, just to summarize this, coming back to the dollar index, even though there's a chance that this could go up, the probability is certainly in favour of it going down. However, we need to wait for the entry. The candles are not giving the entry. The candles are really what's going to confirm when the market turns from bullish, as it has been for this last perhaps just over a week. In fact, it's been 3 weeks really, so 2 weeks of actually significant bullishness, and then last week not too much, but we've got this bullish candle. But we need to see those candles turn from bullish to bearish, and that will confirm an entry to the short side. Preferably we see smallish candles in the sell zone like we have on this daily chart, where the candles turn small and bearish. I want to see that kind of thing happen on a weekly chart. I'd like to see a small red candle, maybe some kind of a small turnaround and trend on the daily chart, and that is the kind of thing that could give me entry into a short trade. On the upside, if we did break up, I'd wait and see. I want to see it break up significantly, and I may even consider then buying a pullback into that 7600 level, but I think there's lower probability at this stage of that happening. However, I'll be prepared for all eventualities and watch the chart and see what happens. Certainly 7600 remains a major level, and a level which will provide trading opportunities, be those long or short trades. Happy trading all. Have a wonderful week. I just want to remind you that we have the Trading Symposium which starts this week. This is raising money for earthquake victims. We've raised around about 40,000 so far. I'd like to raise a lot more money. We have the first event kicking off on Monday. So we have Mike Taylor. He's one of the, or in fact the leading fund manager from New Zealand. He trades small caps, and I thought that could be quite relevant to some of you that trade ICE products, especially if you trade the Russell. But we have some other fantastic speakers, and we have a speaker virtually every single day for 5 weeks, coming right down to some of the big names in the last week, like Jack Schwager, Linda Bradford-Rashke, Jake Bernstein, Larry Williams, Mark Douglas, some really, really big names, about as big as we could get, and all speaking to help raise a little bit of money. So please visit tradingsymposium.com and come along and join us. It would be great if you did. Happy trading, everyone. Thanks for joining us.